Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is March 6, 2018. A lot of things taking place here with a few different markets. I'm going to select the S&P 500, the SPY being the ETF, as the key market I'm going to be looking at today, because it really doesn't have certain conditions that happen all the time. So just to give you a big picture, short, intermediate, and long term all point to the downside. The technical rating to the market is negative. We don't have anything that's overbought or oversold showing up here because this really only shows the last day. But if we flip to the pro alerts, the SPY has something that's a little bit unique, and that is a lazy day indicator. Now, lazy day, what this represents is that it's not going to show up unless we've had at least 15 days, trading days that is, 15 trading days of non-overbought or oversold, basically just true consolidation to the market. And this really doesn't happen, so I don't really talk about that all that frequently. For it to happen in the S&P 500, it's a little unique. So here it is, the lazy day of 16. It's finally shown up here. And if we take a look at the market, this again, the S&P 500, you see that the bars are blue, and because they're normally green, you can see, and it's going to seem strange, I realize, but you see nice little consistent up-down, high-low type conditions. And now with the sell-off in the market and the rally, we're really seeing major movements to the market. And you'd say, what are you talking about? The market is very, very volatile. But the key here to the value chart indicator is that it is dynamic and it quickly adjusts to the market. It's more of a coincidental type indicator. And what it's doing is it has adjusted to the volatility of the market. And that adjustment to the market is showing us that despite the volatility that you can see by your eye in comparison to what we had in the recent past, is that the market is actually quiet. You don't really see it. I admit that. But when you look at the indicator, because it's dynamic by nature and adjusts very quickly to its environment because of its coincidental phase, you can see that it's neither overbought, yellow or red, nor oversold, yellow or red. It has been green the entire time, and that tells us the market is in neutral territory. And when we get 15 trading days, which doesn't happen all that frequently, specifically in the S&P, you can see that the market has been choppy, but it really hasn't gone all that far to the upside or to the downside. You might have thought that the market might have gotten overbought. It did not. The sell-off, you might have thought that the market have gotten oversold. It did not. You can see that it's green. And so what happens is that we call this a lazy day formation. What does that mean? Well, what it means is that the market is, although volatile in comparison to the past, the volatility is contained, and that contained volatility is like a spring being wound up. It doesn't look like it, but it really is. And that means that there's going to be excessive volatility that's likely to be occurring here fairly soon. We might see the market really kind of rally and find some resistance here when we get up to these higher levels. But the key level right now, the only thing that we're really looking at is this one right here. It's not super strong. It's only a 9. And that level is 26.9683. Let's just call it 26.97. And if we scroll across here, you can see that the market, as of right now, 6:45-ish Eastern Standard Time right now, that the market has gapped down, and it's at that level right now. We've stayed support right through here, rallied, came back down, found some resistance at the 50-day, and we're right now again at that resistance / support level. because we're touching it right now, it jumps above it and below it. So the key level that you're going to want to be looking at is the 2697 level in the S&P 500. Let's see what does take place, and just be forewarned that the volatility that we're seeing in the market, because of its dynamic nature, expect explosive moves to the market, and we'll see where the market actually heads. We've got key support to the market here, down in this level right here, so it's going to seem wild here, but the lower support is at 2560 level, and the upper level up through here is at 2875.50, and that's a wide range, no ifs, ands, or buts. But as it stands right now, our systems, ES being flat the market, the Dow Jones is flat the market, the Russell is hedged. We've got a long system and a short system. This is as of basically 6:45 in the afternoon Eastern Standard Time. So we're hedged and or flat. Point is, expect more and more extreme volatility here with the market, given the fact that we're in this lazy day formation. So again, anytime you see this this formation here, it means the market's consolidating, and the number represents how many days has it been in a non-overbought or non-oversold condition. It's highly unusual to see this in the S&P 500. So that being the case, expect increased volatility. And I guess we'll see how things kind of play out here. The other thing I'm going to show to you is, and this is a work in progress, the website being Value Charts, plural, there's an S in there, trading.com. This is our new site that we're working on right now, where we are going to be selling a lot of our indicators, so that if you're on the TradeStation or some of these other platforms, what you can do is attend some of the workshops we're going to be doing where we explain it in some detail, Lazy Day being one of them. This coming Saturday, we're going to be doing a workshop on some profit-taking indicators, specifically our surge, our pulse, and our flow indicator. That's going to be the hour-long presentation we're going to be focused on, and we're going to be looking at other indicators in the near future. And this is the site where we're going to be selling the, or better phrase, leasing the indicators, and then going to extreme detail as to how to use these things on a regular basis. So when you have an opportunity, go to Value Charts Trading, plural, S, and that will give you an indication as to what's taking place. And between Signal Trading Group, which is going to house a lot of the information, and then the teaching side of things, we're going to be looking at things teaching oriented and selling the indicators. Those are going to be related to the Value Charts Trading website. That will give you an idea as to where we're going with some of the workshops and some of the presentations. I've got a total of 1, 2, 3, 4, close to around 12 to 16 presentations that are going to be covered in how to improve your trading. You know, understanding the markets, understanding when to pay attention to markets, how to build a trading plan, how to evaluate a system, the whole kit and caboodle. Those are the things we're going to be doing on this site, the Value Charts Trading site. So from that stand, just expect some big things to be happening, and at the same time expect things in a major way to start to kick into gear here when it comes to the S&P 500. So that'll give you an idea as to what's taking place. I appreciate your time, and we'll have more information here in the coming days. Thanks very much.